Welcome back. You're watching Market Check. Let's focus on the real estate space. Godrej Properties has recently revealed its numbers. The management is with us, Pirojsha, Godrej, to take some questions. Piroj, great having you with us. Let's talk about the quarter. What was the reason behind the subdued performance? Was it largely on account of the subdued economy right now?
Sure, I think it's been a reasonably good quarter for Godrej Properties. We've just announced our results, of course. Our new bookings or new sales for the quarter on a quarter-on-quarter basis have increased by about 30%. The reported revenue has been quite flat. In fact, it's gone down by about 5%. Our EBITDA has increased by 20%, and our net profit has also increased by 5%. Clearly, from an operational perspective, I think things have gone reasonably well when one considers that the environment from a demand perspective has been quite slow. And that we haven't had any new project launches this quarter, but despite that we have seen a substantial quarter-on-quarter increase in bookings. We also have added one new project to our portfolio here in Mumbai, a very attractive project in Bhandup on LBS Marg, which we hope to launch next calendar year. So I think the quarter on the whole has been quite positive.
Okay, let's talk about the fact that we didn't really see any major launches during Q3. Would that change? Do we see a spate of new launches up ahead?
Yes, certainly we have a very robust plan for new project launches in 2014. We have 3 or 4 major projects that we hope to launch here in Mumbai this calendar year. We also have new projects that will be launched in Gurgaon, in Bangalore, Pune, and several cities where we'll have new phase launches in places like Ahmedabad, Nagpur, Kolkata. So I think we do have a very strong plan, and we do expect 2014 to be our best ever year from a new launch perspective. But of course, these launches are dependent on timely regulatory approvals. So we are very focused on ensuring that we don't face any delays on that front.
What is the total saleable area under execution and up for delivery?
Well, those numbers are quite different. The total number of projects under some level of execution is about 20 million square feet. We have about 1 or 2 million square feet of deliveries scheduled over the next 6 months.
What's been the average blended realization in Q3, and do we see any improvement in pricing up ahead?
We sold about 430 crore worth of space, and the area we sold was about 500,000. So our approximate per square foot pricing was between 8 and 8,500 rupees a square foot. I think frankly that was a substantial increase both year on year and quarter on quarter. But frankly, I think the average blended price doesn't really reflect very much other than the project mix that has been sold in a particular quarter, because we have projects where we're selling currently at 30,000 rupees a square foot and at 3,000 rupees a square foot. So I think the blended average doesn't really tell us much, but of course the reported average selling price was much higher both quarter on quarter and year on year.
Okay, there is a sense among analysts that the near-ready commercial projects actually provide a revenue visibility between 800 to 900 crore in the immediate term for the company. Do you think that's true, and by when do you see this hitting the market?
Yes, that's in the ballpark of what we would expect as well. Of course, we also have uncompleted commercial projects, particularly a very large project we're doing in Bandra Kurla complex here in Mumbai, which has a much larger revenue recognition potential. But yes, the projects that we have that are completed or near completed have a number approximately similar to the number you gave.
And by when do you see margin profile improving for the company in total?
Yes, well, margins also do vary quite a bit project by project. I wouldn't want to get into specific margins at the project level. I think what's very encouraging is that our EBITDA margin at the company level this quarter was about 38%, which is the highest it's been for many quarters. That's of course a mix of both projects and other income and so on. But I think the margin profile of the company as a whole certainly is looking much better. Most of the new projects we've been adding are in the profit sharing model or in the development management fee model. These models are inherently higher margin, and we do expect over the medium to long term to see an improvement in margins. Quarter to quarter margins, as I mentioned, are more a factor of specific projects that are recognized in that quarter and the level of sales in those projects, as well as the amount of other income in particular quarters.
Can you talk about the debt position overall for the company right now?
Well, our IPO now was almost 3.5 years ago. I think more relevant is the way our debt has moved over the last year or two. If we look at it, both our absolute net debt and our gearing levels are far stronger than they were a year or two ago. Our net debt at the company level currently is about 1,500 crore and our gearing level is 0.69:1, both of which are well within our guided range and which we feel are very, very comfortable levels.
And just one final question, a requirement of more funds, especially after the recent rights issue completion?
No, I think as you rightly mentioned, we've just completed the rights issue in September of 2013. We are very adequately capitalized and have adequate capital for all our investment plans. We of course hope to generate substantial internal accruals through new launches. So we don't have any additional fundraising plans in the current calendar year.
Just one final question before I let you go. As per recent reports, the Haryana government is looking to increase the floor area ratio in Gurgaon. If that happens, how much upside would be possible for you, incremental upside?
Well, I think it's obviously very early stages. As you said, these are as of now unconfirmed reports. Our general sense is, of course, we do have some projects in Gurgaon, so if that increases, we will benefit from that. But I think more importantly, FSI increasing anywhere, to my mind, is a good thing. And it's not just a good thing for developers who, of course, can benefit from the extra area available to sell on their land, but it also ultimately can be a great tool to improve pricing on a per square foot basis to consumers, because if the land cost that you have can be loaded on a larger total amount of sale area, some amount of that benefit can be passed on to consumers. Certainly from a city perspective, I think dense development the world over has proved to be a better model. So I think governments should look at FSI increases. Of course, they have to simultaneously make sure the planning from a road and other infrastructure perspective is kept in mind.
All right, fair enough. Thank you so much for your time. Great chatting with you. The stock's not doing much. It's down about 2%, slightly dismal numbers, but then the outlook perhaps could improve going forward as the management just signaled to us. With that, that's a wrap on Market Check. Stay with us. Trading Derivatives is right up next.